Hello and welcome. You're listening to the Corporate Actions is the Lifeblood of Investment soundbite. We're joined by Jonathan Bloch, CEO of EDI, and Mark Woolfenden, Managing Director at Euromoney Trade Data. Thank you for joining us, Mark and Jonathan. Could you tell the listeners a little about yourselves?
Hello, my name is Jonathan Bloch. I am the CEO and founder of Exchange Data International. We are a reference and corporate action company based in London with clients worldwide, although predominantly in the USA.
My name is Mark Woolfenden, the Managing Director of Euromoney Trade Data, the premier reference data provider into the futures and options market. Our flagship products include contract specifications, symbology, and regulatory reporting data.
So what was the driver behind the strategic partnership of Euromoney Trade Data and EDI's Derivative Actions Service?
Exchange Data International has been doing corporate actions in one form or another since 1994. We first started doing corporate actions for the UK markets, and our clients very quickly said to us that they were interested in the world. So in 1999, we started working on a worldwide corporate action feed for equities. We launched that in April 2021, and we have expanded our coverage to include all equity markets and over 45 corporate action events. Some time ago, speaking to some big investment banks, they complained that there was no feed of corporate action data linking underlying equities for derivatives. So they had a derivative, and then there was a stock split. And then they fished around for information on how the derivative would be affected. So several years ago, probably about 5 years ago, we set about trying to work out how to link corporate actions on the underlying equity security with the contracts and series that would trade on equity derivative markets. We have managed to produce such a feed. We linked up with Euromoney Trade Data as they are one of the premier providers of derivative data to the banks and other traders in this area. So we have brought our expertise in the corporate actions market and combined that with Euromoney's knowledge and penetration of the equity derivatives market to produce a premier product. We have made this available through Trade Data's front end so that clients can utilize this groundbreaking product.
And Mark, do you have any additional comments?
Trade Data and EDI have worked together before on corporate actions alert solution, but this is a latest collaboration, extends that relationship. And we've been in discussions with EDI and have had a lot of mutual industry participation, at least over a decade. The strength that ETD brings to the partnership is that we are a premier provider of reference data for futures and options. So we're in the derivatives space. And therefore, we have a large number of clients who are existing, who take our data services, and those services expand to lots of different types of reference data. But obviously where we are providing reference data where there is any equity related underlying, whether that's options or futures that have an equity underlying, then corporate actions are essential to integrate into that feed. We've been looking at this for actually many years, and it's been a situation where we never wanted to do the heavy lifting on creating say, for example, a cash market corporate action service. You need a lot of people, a lot of time, a lot of investment to do that. So when we originally looked at the derivatives corporate action service with EDI, it must have been now 3 or 4 years ago, we were looking at the same exchange notices, but we just didn't integrate that as a service. So we had more of a passive corporate action service. So I think in terms of the collaboration, we bring, in a sense, access to clients who really do need this service. And through the worldwide corporate action service that underpins the derivative action service, we can and have readily integrated the notifications that can be created on corporate actions, of which there are many hundreds, directly into our product database. And therefore we can then provide the technical solution to alert on those changes, including all the provenance and the other aspects of it. So it's a meeting of two quite strong powerhouses in reference data services who've operated in literally different asset classes, different parts of the market, and bringing it together under the derivative actions corporate action service it's a great manifestation of both strengths of our companies.
So Mark, Why is corporate actions reference data critical to the smooth functioning of post-trade futures and options processing?
It's said that the annual potential losses of not getting corporate actions could be around about $1 billion. That's sort of hearsay, but it's a figure that is bandied around quite a lot. So there's an awful lot to be lost on not actually having an effective system to monitor what are in effect the underlying assets of your related futures or options contracts. And those trade positions that you hold either proprietarily in-house or for your clients, you really do need to know a couple of things. First of all, you need to know the date of the effective date of the corporate action. And there are two dimensions to that. One is how soon you are made aware that a corporate action is coming up for a particular underlying equity-related asset. And that's important because how the market reacts to that could trigger an immediate trade if a trading desk is actually looking at its portfolio. So the timeliness of the corporate action notification is really actually very important to trade away any risk that you may or may not see relative to the type of corporate action that's being announced. The problem is the industry sometimes doesn't give you the definitive corporate action specification or the changes to the contracts that are out there until right up to sometimes even the day before the effective date. So you need two things. You need a good alerting component, but then you need a good component that can update the actual reference data before it becomes effective in most cases. And unfortunately, that effective date can be literally the day before. A lot of cases, it's well before that. And so you can provide an effective date of the actual change so that when that day comes, you are very well prepared for it. So if you are a trading desk and you hold this portfolio of equity-related derivative contracts, your clients are expecting you to provide you with alerts and updates and risk reports against the portfolio that they hold, and therefore having that timely connection about the notice and then the actual specification about what's happening with a corporate action on that particular product is really essential.
And Jonathan, do you have any thoughts?
Corporate actions in some way represent the lifeblood of the securities industry. Companies change the way they operate and capital structures all the time, and this is reflected in corporate actions. If you get the corporate actions wrong, you could incur thousands if not millions of damages as well as reputational risk. There are many components to corporate actions. First is the timeliness. You need to know as soon as the corporate action announcement is made what the implications are both for your front and back office, and you might have to adjust your records accordingly. Otherwise, you might lose track of your security. The second element is there going to be a change in symbology? Because if there's going to be a change in symbology, you need to know about this so that it can be reflected in both your internal records and your notifications to clients. It doesn't look very good, and it is not very good if you fail to notify a client because you got the symbology wrong. Thirdly, the records information that you have to be complete. There is no value in giving a client or updating your own records with incomplete information. It needs to be all there with the effect on the security. So that if there is, for example, a scheme of arrangement, which can be very complicated, this feeds through to the derivative. How does that derivative change? What happens to the strike price? What happens to security description? Does the symbology change? All these questions you will need to be able to be answered and are answered via corporate actions feed. We hope together with Euromoney's trade data, with this new corporate action feed derivative actions, to answer these questions.
So Jonathan, what challenges do firms confront in managing corporate actions at the moment?
What challenges do firms confront in managing corporate actions at the moment? There are a number of challenges with respect to corporate actions. For first thing, there's the sheer volume of corporate actions. So one has to have a very robust process in place to manage all of them. Secondly, you have the case of late announcements of information. So on certain exchanges, the amount of the dividend is only announced the day before the X date on the X date itself. So it's very important to get the information in a very timely manner. Otherwise, one will miss the amount of the dividend when it counts most on the X date.
Why are links to original corporate action notifications important to firms, Jonathan?
The reason why original notices are important is so that the firms can ensure that they have the validation for what they're going to do in their hands. For regulatory purposes, it is critical they can show proof why they took particular actions, and by attaching the original notice, they can see where in the data feed has been derived. Also, it would clear up any misunderstandings they might have as it relates to the information on the data feed.
Having the most up-to-date corporate actions is essential to managing portfolio risk. So Mark, how do you ensure that this happens as part of Euromoney Trade Data's data service?
Well, we have a tried and now tested, proven production systems in both companies. We have spent a lot of time getting the connections between the updates that come across from EDI into the Money Trade Data. And that's been through a rigorous QA check against a number of elements of data quality. So accuracy, timeliness, and recency. And recency is really quite key in this as well. So generally speaking, there is a file, a batch file update that normally happens that still works in this world, but we also have intraday updates where they occur. All that data is then pointed and exposed and surfaced on our online portal, which we'll talk about in a few minutes. So really, it's the portfolio risk is important to understand, because if you're working on behalf, you're managing risk on behalf of a client or even your in-house investments, you need to know as soon as possible when things are happening. So you may have a set of contracts with equity-related underlyings against which you put a watch list together, and therefore it automatically sends you an alert or a message in some way that's appropriate to your workflow. And that's exactly what needs to happen. It's all very well having a good and robust service that is triggered a notification of a corporate action change. You need to make sure it makes the hops, the steps into the workflow that are meaningful and timely in order to make it really very effective. And with that overhead or that risk of eye-watering numbers that are at risk in industry each year, it's very much a focus for existing portfolio managers at the moment. And essentially their problem or their challenge is that many of them are trying to migrate away from legacy systems. So they're following a best-of-breed component-based solution going forward, and that adds another layer of or potential point of failure. So it still really relates to the type of corporate action, how it needs to flow through this new circuitry. And that's the sort of challenge, keeping all of those systems live and meaningful, where each of those components have been brought in to do a particular function. Margining, for example, you need to make sure that this particular record can go through this upgraded trading system pathway, as it were, and hit the right spots where it needs to hit the trading desk, and they need to take action on it.
And Jonathan, how do you ensure that this happens as part of EDI's data service?
We take extra care to ensure that we have the correct information. In addition, both software and validations are in effect.
Viewzone is a really effective way to keep track of corporate actions for your contract portfolio. Can you tell us more about the online portal, Mark?
The Viewzone portal is a window on, firstly, the trade data, reference data product set, within which you can find the equity-related futures or options contracts that are affected by corporate actions. So the first thing you can do is you can search for contracts that you have an interest in, and you can then mark them up as a part of a watch list, such that if there is an event triggered on a contract within that watch list, you can get an alert and notification, and that can manifest itself in many different ways. We have a sort of ticker that goes across the top of the screen, and within the ticker you can see what contracts are sort of marked up, but then you can drill down into the corporate action notification even back to the provenance, which is the original documentation upon which the data has been transformed from analog printed format into digital machine readable information. So you can see what the source documentation, where the contract has started its journey on the corporate actions notice. So Viewzone, as I said, it has a lot of other multiple assets in futures and options types of contracts in it, but it also, for those equity-related futures and options contracts, has an awful lot of other related information like symbology and regulatory reporting, which is all part of the workflow as well. Because along the way, you have a contract that if you have to take a trading decision as a result of a corporate action, that will then translate itself literally into, there's a trade being executed, you need to clear and settle it, report it, both to the regulator and to your client. You need to make sure it hits the downstream systems in the right way using the right symbology elements to that. So the corporate action isn't just about having notification about a particular contract. It's about how you then take that information and use it either to make trading decisions or to assist clearing and settlement operations. So yeah, Viewzone, it's having corporate actions in there is a great addition to the service. And I actually think it's hit the market at a very good time, because many firms are challenged by having this disparate, not silos as such, because that's a sort of an old world, but there's a lot of legacy migration going on, new best-of-breed components, which you talked about before, the data needs to navigate its way around. And having it literally a login to, the firm can get a login to this solution rather than bear any heavy IT-related overhead in integrating it as well and make it part of your portfolio.
Thank you for listening.